Here we're going to finish our Amanda's Campus Delivery transactions for June. In the previous video, we went through the first 3 transactions. And so we will now go through the rest of the transactions. So the next one is on the 6th, and we paid the first installment from the transaction to Big Red Scooters. So back on the 5th, we bought delivery motor scooters from Big Red Scooters, and we bought them on account for $900. Well, now we've made a payment toward that. We've not received new scooters. We're just making a payment on where we received scooters in the past. So now we're going to take a look. Here is our Excel transaction sheets. We've already got the first 3 transactions listed out. So now we're going to go to this 4th transaction. What did we give up? Well, we made a cash payment, and so we gave up cash. What did we receive? Did we receive new equipment, new scooters? No, we did not. Okay. We received the fact that the obligation that's on our shoulders has now been a little lightened. We have less that we owe out to a vendor. Okay, and so that's what we're receiving in it. When we make a payment, it's the fact that we owe out less to a vendor than we did. Okay, so now we have to choose our accounts. So for our give up, which is cash, we know that there's a cash account and that it is an asset. Okay, we're paying cash out, so that is a decrease in cash. And when we have a decrease in an asset, it's opposite of increase, and so that would be a credit. We know that an increase is a debit for A, W, and E, which is assets, withdrawals, and expenses. If we have an increase on any of the 3 of those, it will be a debit. If it's a decrease, however, which is the opposite of increase, then we will have the opposite of debit, which in this case is credit. And we know that if we have an increase is a credit in L, I, and R. Oops, I've got a little L there. Let me put a capital L. Okay, L and I and R. Okay, which is liabilities, owner investments, and revenues. So if we have an increase in one of those things, we automatically have a credit. What do we have here? For the receive, we owe out less to vendor. When I owe out to the vendor, what account am I going to use? Well, when we owe out to vendor, whether it's more or less, we're talking about accounts payable account. And so we're going to put that as our account name. Now, you can put an A/PAY, the short version of accounts payable, helps save some typing for yourself. What kind of account is accounts payable? Well, anything that ends in payable, it's usually a liability. We owe out to others is a liability. Do we have more or less that we owe out than we did 5 minutes ago? Well, it says right up here in the what happened, we owe out less to the vendor than we did 5 minutes ago. So we have a decrease in a liability. So we go to our chart And liabilities is here. If we have an increase, it's going to be a credit, but we don't have an increase. We have the opposite. We have a decrease, so we're going to use the opposite of credit, which is debit. Now, we have one debit and one credit, and so our debits equal our credits, and we can say yes. All right, the next one, we received cash for delivery services rendered. Okay, that means performed. That means Amanda ran around on the motor scooters doing deliveries, sweating, taking her time. That's what the business was giving up. Okay, and it received cash. Okay, so we received cash, and we gave up the fact that we performed services. Another way of saying that is that we sold services. That's what we gave up, that we had to perform, that we had to sweat, that we had to run around giving up our time. Okay? All right, which account am I going to use for cash? In the receive section is cash, which we know is an asset. And do we have more or less of it? Well, we received cash and deposited it, so we have more cash. We have an increase in an asset. And we know from our little chart, an asset, an increase is a debit, and we have an increase, so that's going to be a debit. Okay, and for the give up, we need an account for sold services. Now, the minute we see that we sell something, we know that's going to be a revenue account. So when we go back to our chart of accounts, we go into the revenue section, and there it is, delivery fees. And that is, as we just said, a revenue. Do we have more or less services that we sold than 5 minutes ago? Well, more. So that's an increase in a revenue. If I go to my chart, I see revenue, increase. Yes, I have an increase. So that will be a credit. Okay, we have one debit and one credit, so we are good to go, and we say yes. Okay, next one, we paid cash for June office rent of $200. Okay, so we paid out cash, so that means that we gave up cash. And what did we receive in exchange? Well, we got to use the office space. If you don't pay your rent, what happens? You get kicked out. It's not like you own that space. You get the right to use it if you're paying your rent. So here we paid out our cash for the rent, so we do get to use the office space. Okay, so here, use of office or store space. Okay? All right, so for our give up, which is cash, we're going to use the account called cash from the chart of accounts, and we know that's an asset. Do we have more or less cash than we had 5 minutes ago? Well, 5 minutes ago, yes, we had more cash because now we've had to pay it out, so we have less cash. We have a decrease in an asset. And I look up at my chart, I look up under assets, an increase is a debit, but I have the opposite, so that would be a credit. Okay. Now, for my receive, I have use of office or store space. Whenever we use something, we know that's going to be an expense. So I go to my chart of accounts, I look under expense. Here's my expenses, and there's one called rent expense, which would be for using office space. So that's what I'm going to put in, rent expense. What kind of account is that? That is an expense. Do we have more or less? And this is one of those times it's easier to go up to the top to say, do we have more or less cash? Well, we have less cash. Do we have more or less use of the office space? Well, 5 minutes ago, we didn't have any use of office space. Now we do, so we have more use of office space, an increase in office space. Okay. So I have an increase and an expense. I look up expense. Increase is debit. So I have one debit and one credit. So my debits equal my credits. I can say yes. Okay, next one, we paid the phone bill. Okay, so we gave up cash. And we received, in exchange, the use of the phone. If we don't pay for the phone, we don't get to use the phone. Okay? So which accounts for the give up? It's going to be cash. We know that's an asset. We had to pay it out, so that's a decrease. I have a decrease of an asset, which is opposite of increase, so that's credit. Now, for use of phone, I'm going to go to my chart of accounts. I know whenever I use something, that's going to be in the expense area. And here I have a telephone expense account. And what kind of account is that? That's an expense. Do we have more or less use of the phone than we did 5 minutes ago? Well, since we pay for it, we now have more use of the phone than we did 5 minutes ago. So I now have an increase and an expense, and that will be a debit. I have one debit and one credit. So yes, my debits equal my credits. All right, next one, we made deliveries on account for a total of $600. Accounting department, $400, and the School of Music, $200. Okay, and so here is where we made deliveries. So we performed our services, we sold our services, is what we gave up. Now, what did we receive? Did we receive $600 in cash? No. We did these deliveries on account. That means the accounting department and the School of Music is going to pay us in the future. They're going to pay us the $600. But right now, today, we went running around making the deliveries, but we did not receive any cash today. So what we received is the fact that these customers legally owe us. Okay, so we gave up the fact that we sold services. We sweated. What did we receive? We did not receive cash. We received the fact that customers owe us. That customer legally owes us.